We still have seen a significant deal flow in 2007, 40% up compared to 2006. But that's in dollars. If I calculate back to euros, I'm below 20%. But most strikingly, the deal flow in the second half year compared to the first half year has really slowed down. It almost has been flat. We also had our CFO roundtable on infrastructure in September. Credit crunch was prominent on the agenda there. The overall feeling at that time was infrastructure is not affected. It has a long time horizon and the cost of funding hardly has gone up. Today we know better. Cost of funding has gone up 25 to 50 basis points. In real terms even more. Transaction fees have considerably increased. Monoline insurers lost their credit status and they are a very important factor in providing debt to the infrastructure market. We see a slowdown in deal flow. At this moment you cannot really see how big the slowdown will be because 2008 is still going to be a relatively good year, but that's because of the pipeline which has been built up in the past. But we now have the slowdown in the pipeline, so what will be the impact on future years? Nobody knows. One of the critical questions which we raised in May 2007 is private capital a long-term solution to infrastructure problems? Well, today the credit crunch demonstrates that is not necessarily the case. The stake of infrastructure private capital has not grown as significantly as one would have expected a year ago. And maybe it's a temporary slowdown and it will pick up, but where everybody thought a year ago, this is the solution to the world infrastructure problem, well, it's only a small solution, but governments still have to deal with it themselves.